Hi! Before embarking on the exciting journey of building your e-commerce business in Malaysia or expanding your online sales there, here are some key considerations to keep in mind. Low-value goods taxes, custom duties, income tax and double tax treaties, withholding taxes. As of January 1st, 2024, Malaysia has imposed a new 10% sales tax on the import of low-value goods, or known as LVG, sold online in the country. Under this latest tax update, all imported goods that are sold online at less than 500 ringgit, equivalent to $105, will be subject to the 10% tax rate. The tax charged on goods that are imported to Malaysia by land, sea and air applies only to freight on board or product price, excluding shipping and other fees. Low-value goods that are excluded from this ruling are electronic cigarettes, tobacco products, liquors and cigarettes.
Sellers on online platforms or marketplaces in Malaysia must register with the Royal Malaysian Customs Department, RMCD, if their annual sales of low-value goods exceed RM 500,000, equivalent to $105,000. Once registered, a 10% tax on all low-value goods must be remitted. Businesses must navigate import duties, customs clearance, and product restrictions to ensure compliance and smooth operations when importing or exporting goods via e-commerce. Accurate documentation and adherence to regulations are essential to avoid delays, penalties, or legal issues.
Any income in relation to e-commerce is deemed to be derived from Malaysia if it is associated to any activities in Malaysia, regardless of whether that income is received in Malaysia or otherwise. The determination of whether or not an income is derived from Malaysia is a question of fact and degree. The wider the scope and extent of the business operations in Malaysia, the greater the likelihood that the income of that operations is subject to tax in Malaysia. In the case where a double tax agreement, or widely known as DTA, is applicable, in order to determine whether Malaysia has taxing rights over the business income is based on whether PE exists. PE is permanent establishment under Article 5 of the DTA between Singapore and Malaysia. Income tax considerations. To apply double tax treaty benefits, we will have to apply Article 4 to determine if the company is a tax resident of Singapore or Malaysia. Article 5 will be applied to see if the company has a permanent establishment in Malaysia. The term permanent establishment means a fixed place of business through which the business of an enterprise is wholly or partly carried on. The wider the scope and extent of the business operations in Malaysia, the greater the likelihood that the income of that operations is subject to tax in Malaysia. Article 7. The profits of an enterprise of Singapore shall be taxable only in Singapore, unless the enterprise carries on business in Malaysia through a permanent establishment, Article 5, situated therein. If the enterprise carries on business as aforesaid, the profits of the enterprise may be taxed in Malaysia, but only so much thereof as is attributable to that permanent establishment. The entirety of Article 7 must be read and applied in full.
The e-commerce has given rise to a number of new business models. Some of the models may complement or overlap with each other. For example, payment service could be described under e-commerce or under cloud computing. The business models are by no means exhaustive. The innovation in the e-commerce transactions allows the rapid development in new business models. The common new business models are identified as above. You can pause the video to view the diagram carefully. A non-resident person who derives income from e-commerce transactions may also be deemed to derive that income from Malaysia in relation to special classes of income. Any amount paid in consideration of any advice given, or assistance or services rendered in connection with the management or administration of any scientific, industrial, or commercial undertaking, venture, project, or scheme in relation to e-commerce transactions can be classified as special classes of income. Hotel N, a Malaysian resident, is using an online service via a platform provided by Suka Travel, who is a non-resident. Under this service arrangement, Hotel N's customers can now book rooms and also make payments via this platform. Subsequently, after deducting fees or commission from these bookings, Suka Travel will release the balance to Hotel N. Based on the facts, if it is proven that the service is rendered in Malaysia, then the fees or the commission received by suka travel is subject to withholding tax.
If you are a Malaysia non-tax resident, you may be subjected to withholding taxes. Effective from year of assessment 2017, the definition of royalty has been amended where the word software has been added to the definition of royalty, where, as mentioned in the ITA 1967, to include the use or the right to use of software, any transmission through satellite, payment in respect of total or partial forbearance, the use of or the right to use of know-how or information concerning technical, industrial, commercial or scientific knowledge, experience or skill, and use, or the right to use licenses with regards to some or all of the part of the radio frequency spectrum. In this example, MB Senderan Berhad undertakes the activity of online trading in scarves and accessories. MB uses a renowned social media company as a platform to advertise the sales of its products. The social media company allows its customers, including MB, to create its own advertisement campaign using its platform. The payment made to the social media company is classified as royalty, and it is subject to withholding tax.
In this example, OL Senderan Berhad is a manufacturing company that uses accounting software for its financial reporting. On the 2nd of March 2018, OL purchased a software solution from a non-tax resident in Malaysia UBS for the amount of Malaysian ringgit 70,000, and on top of that pays an annual licensing fee of Malaysian ringgit 3,000. Based on these facts, payment for the use or the right to use software is considered as royalty. Therefore, the payment of Malaysian ringgit 70,000 and licensing fee of Malaysian ringgit 3,000 is subject to withholding tax. Saloma Enterprise runs an online business, selling its items worldwide through an online selling platform owned by RBay, who is a non-resident. Saloma Enterprise will then receive payment for the goods sold via an online payment service platform provided by Bayakawan, who is also a non-resident. In the agreement between Saloma Enterprise and RBay, it was stated that the monthly subscription fee is related to the right to use RBay's application. The monthly subscription fee falls under the category of payment for the use or the right to use software, and it is considered as royalty. The payment is subject to withholding tax. The transaction fee received by RBay on the services rendered is subjected to withholding tax. However, since the services were performed outside Malaysia, it is not subject to withholding tax. In the agreement between Saloma Enterprise and Bayakawan, it was stated that the transaction charges of 3.9% will be deducted from the value of each transactions. The transaction charges received by Bayakawan on the services rendered is subjected to withholding tax. However, since the services were performed outside Malaysia, it is not subjected to withholding tax.
Thank you for watching. Just a heads up. The information shared in this video is meant to be educational and general in nature. It's not specific tax advice for you or your business. Always consult with a trusted tax advisor to address your unique situation. Please like and subscribe to our videos.